Do you know what your bank doesn't want you to know? Welcome to the labyrinth of banking secrets, a world where the walls whisper the truth about how banks operate and make money. Today, we're embarking on a journey to lift the veil, to understand the subtle art of banking and the tricks they'd rather keep under wraps. From hidden fees to sneaky interest rates, we're diving deep into the abyss. So brace yourself and stay tuned as we unravel the 9 tricks your bank doesn't want you to know. The first trick revolves around overdraft fees. Now you might wonder, what are overdraft fees? Well, these are charges banks levy when you withdraw more money than you have in your account. It's like a short-term loan from the bank, but with a catch. The catch is the hefty fee attached to it, which is the bank's way of profiting from your financial missteps. To put it simply, if your account balance is $100 and you make a purchase of $120, you've gone into overdraft by $20. Now, not only do you owe the bank these $20, but you're also slapped with an overdraft fee. This could be anywhere from $20 to $35 per transaction, depending on your bank. Yes, you heard it right. You might end up paying more in fees than the amount you actually overdrafted. So if you're not careful, these fees can accumulate quickly and cause a significant dent in your wallet. But don't worry, there are ways to outsmart your bank and avoid these fees. Firstly, keep a close eye on your account balance. It may sound obvious, but it's surprising how many people don't do it. Regularly monitoring your spending can help you avoid overdrafts in the first place. Secondly, consider setting up low balance alerts. Many banks offer this service for free. They'll send you a message when your account balance dips below a certain threshold, giving you a heads up to stop spending or transfer more money into your account. Thirdly, link your checking account to a savings account. If you do overdraft, the funds can automatically be pulled from your savings to cover the difference, often for a much smaller fee than the typical overdraft charge. Lastly, if you do find yourself facing an overdraft fee, don't hesitate to call your bank. Politely explain the situation and ask if they can waive the fee. You might be surprised how often they're willing to do this, especially if you don't make a habit of it. And that's how you can outsmart your bank by avoiding overdraft fees. Scene script. Next up, we have the trick of interest rates. Interest rates can be a slippery slope if you don't understand them. Banks are masters at playing this game, and they use it to their advantage in 2 ways. First, they offer low interest rates on your savings. This means the money you've worked hard to set aside is growing at a painfully slow pace. On the other hand, they charge high interest rates on loans, ensuring that you're paying them a hefty sum over time. But why do banks do this? Well, it's simple. Banks are businesses, and like all businesses, their goal is to make a profit. They do this by borrowing money from you at a low rate, your savings, and lending it to others at a higher rate, loans. This difference, known as the spread, is where banks make their money. But don't fret. You can play this game too. To get the most out of your savings, consider investing in higher yield options. Look for high-interest savings accounts or consider other investment vehicles like stocks or mutual funds. These can offer higher returns, although they come with their own risks. When it comes to loans, shop around. Don't just accept the first offer you get from your bank. Other financial institutions may offer lower rates. And remember, every percentage point counts. Even a small decrease in your loan's interest rate can save you a significant amount over time. One more thing, always make sure to read the fine print. Banks are notorious for hiding important information in the small print, including changes to interest rates. So be vigilant. It's also worth mentioning that interest rates can fluctuate. They are influenced by a variety of factors, including the economy, inflation, and the central bank's policies. So, keep an eye on these changes as they can impact your savings and loans. In conclusion, interest rates are a powerful tool that banks use to their advantage. But with a little knowledge and savvy, you can turn the tables and make these rates work for you. Remember, it's your money. Don't let the bank take more than its fair share. Scene script. Trick number 3 is hidden fees. Let's dive into the deep, murky waters of the banking world. Hidden fees. They're the sharks lurking beneath the surface, waiting to take a bite out of your hard-earned money. These are the charges that banks sneak into the fine print of their contracts, hoping you won't notice until it's too late. So how do banks hide these fees? Well, they're often buried in the depths of complex financial jargon that most of us usually skip over. Whether it's a fee for making too many transactions or penalties for not maintaining a minimum balance or even charges for using an ATM, These hidden fees can quickly add up without you even realizing it. Now, you're probably wondering, how can you spot these hidden fees? The key is to be vigilant. Take the time to read through the terms and conditions when opening a new bank account or signing up for a credit card. It may seem tedious, but it's a small price to pay to save a lot of money in the long run. Another tip is to ask questions. Don't be afraid to ask your bank directly about any fees that might not be immediately obvious. A good bank should be transparent about their charges. If they're not, it might be a red flag that they're not the right bank for you. And finally, stay informed. Keep track of any changes to your bank's policies. Banks often change their fee structures, and they're required to notify you about these changes. But again, these notifications can often be overlooked if you're not paying attention. Remember, the best defense against hidden fees is knowledge. The more you know about how your bank operates, the better equipped you are to avoid getting caught out by unexpected charges. So, take the time to understand your bank's fee structure. Read the fine print, ask questions, stay informed. Don't let the banks pull the wool over your eyes and sneak in those hidden fees. Knowledge is power. Don't let hidden fees sneak up on you. The fourth trick is all about minimum balances. Now, you might be wondering, what is a minimum balance? It's simply the smallest amount you're required to have in your bank account. Banks use this as a means to ensure they have a steady cash flow. But here's the kicker. If your balance falls below this minimum, you get charged a fee. Yes, you heard it right. You get penalized for not having enough money. Now, how can you avoid this? First, understand your bank's policy on minimum balances. Is it a daily minimum or a monthly average? Once you know this, you can strategize. Keep track of your account and make sure you're always above the minimum. If this seems like too much, consider switching to a bank with lower minimum balance requirements or no minimum at all. Remember, banks are businesses and their goal is to make money. But it's your money and you should be the one who benefits from it. Don't let minimum balance requirements drain your pockets. Moving on to trick number 5, credit card charges. Now this is a big one, folks. Banks and credit card companies make a significant portion of their profits from these charges. Let's break it down. Firstly, there's the annual fee. This is a charge that you pay each year for the privilege of using the credit card. While some cards offer rewards and perks that can offset this fee, many do not, so it's essential to weigh the benefits against the costs. Next up, we have interest charges. These kick in when you carry a balance from month to month. The longer you take to pay off your balance, the more interest you'll accumulate. And let's not forget about late payment fees. If you miss a payment or pay late, you'll get hit with a fee and your interest rate might increase. Now here's the kicker, cash advance fees. These are charged when you use your credit card to withdraw cash from an ATM. Not only are these fees typically high, but you'll also start accruing interest from the moment you make the withdrawal. So, how do you avoid these charges? Well, for annual fees, consider using a card that doesn't charge one. There are plenty of options out there. To avoid interest charges, try to pay your balance in full each month. If that's not possible, at least make the minimum payment to avoid late fees. As for cash advance fees, it's simple. Avoid using your credit card for cash advances unless it's an absolute emergency. Remember, your credit card isn't a debit card. Try to use it wisely. Finally, always read the fine print. Know what you're signing up for. Credit card companies are required to disclose all fees and charges, but it's up to you to read and understand them. Stay smart with your credit card and avoid unnecessary charges. Trick number 6 is about ATM fees. Have you ever wondered how banks make money when you withdraw cash from an ATM that isn't theirs? Well, it's all about ATM fees. These small, seemingly insignificant charges add up significantly over time, padding the bank's pockets at your expense. Now, how can you sidestep these fees? One way is to use your bank's ATMs. Another is to opt for banks that reimburse ATM fees. It's also worth noting that many credit unions are part of ATM networks that allow free withdrawals. Alternatively, you can choose to get cash back when making debit card purchases at grocery stores or other retailers. This option is usually free of charge. You might also consider withdrawing larger sums less frequently to minimize the number of fees you incur. These tactics can help you to navigate the banking world more effectively, keeping more of your hard-earned money in your pocket. Remember, every dollar counts. Trick number 7 revolves around account maintenance fees. These are charges that banks levy to keep your account open, usually on a monthly basis. They're like a rental fee for using the bank's services. But here's the thing, not all banks charge these fees, so what's the trick to avoiding these fees? Shop around. Look for banks that don't charge account maintenance fees. Some banks may waive these fees if you maintain a certain minimum balance. Others might drop the fees if you have direct deposit or use their bill pay service. Consider online or digital banks. They often have lower overhead costs and are more likely to offer accounts with no maintenance fees. Also, don't be afraid to negotiate with your bank. If you're a long-standing customer, they might be willing to waive these fees to keep your business. Remember, every dollar you save on fees is a dollar more in your account. Keep your money where it belongs, in your pocket, not the bank's. The eighth trick is all about currency exchange rates. Currency exchange rates, they're a tricky business. You see, banks and other financial institutions have made a habit of playing this game rather well. They profit from the rates they offer you when you're traveling abroad or sending money overseas. It's a subtle form of highway robbery, one that's hidden behind a facade of convenience. Imagine this, you're planning a trip abroad. You go to your bank for some foreign currency and they give you an exchange rate. Now, you probably assume that this rate is the best you can get, or at least close to it. After all, your bank wouldn't cheat you, would they? Well, not exactly cheat, but they certainly won't give you the best deal. Banks are businesses after all, and they're in the business of making money. So they'll offer you an exchange rate that includes a margin or spread. This is their profit, their cut of the deal. It's the difference between the rate they buy the currency at and the rate they sell it to you. And the reality is, the rate you're being offered is often far from the best available. So how can you make sure you're getting a fair deal? Well, the first step is awareness. Understand that the rates offered by banks are not the only ones available. You have options. Consider using online currency exchange platforms or currency exchange bureaus. These often give better rates than banks as they have lower overhead costs. Another tip is to plan ahead. If you're traveling, get your currency well in advance. This allows you to shop around for the best rate, rather than being at the mercy of whatever rate your bank offers you at the last minute. Finally, if you're making a large overseas transfer, consider using a forex broker. They specialize in currency exchange and can often secure you a better rate than your bank, especially for larger amounts. Don't let your bank take advantage of you with unfavorable exchange rates. Be savvy, be smart, and remember, the power to get the best deal is in your hands. And finally, trick number 9, early withdrawal penalties. These are fines that your bank imposes when you withdraw money from a savings account or certificate of deposit, CD, before a specified date. It's a tricky way banks use to keep your money with them for a longer period, earning them more interest. Now, you may be wondering, how can I avoid these penalties? The answer is simple. Patience and planning. Try to plan your finances in a way that you won't need to touch your savings or CDs before their maturity. But life happens, and sometimes you may face emergencies. In such cases, consider a high-yield savings account or a no-penalty CD. These options provide you with the flexibility to withdraw your money without losing a chunk of it to penalties. Also, always read the fine print before opening any account. Knowing the terms and conditions can save you from unwanted surprises. Remember, it's your money. You should decide when and how to use it. So those were the 9 tricks your bank doesn't want you to know. From the hidden menace of overdraft fees to the subtle snares of early withdrawal penalties, it's clear that awareness is your best defense. Never underestimate the importance of understanding these tricks. They are not just random fees, they are systematic strategies designed to chip away at your hard-earned money. Remember, knowledge is power. Stay informed, stay in control, and most importantly, stay financially savvy. We hope you liked the video. If so, it would help us a lot if you left us a comment, since YouTube's neural network values this very much and thus recommends our videos to more people. Give them a like and activate the bell so that you receive a notification when we upload our next video. So see you in it. Greetings.